Welcome to the fourth instalment in our Ripehouse end-to-end investment system. In this edition, we will discuss how to reliably find suburbs that are leading the charge, driving growth ahead for the wider local government area and firmly in our target buying window. We will also break down a number of soft signals that we look for to ensure that in addition to outstanding growth potential, we are actually able to purchase property in the target suburb area. Hi, I am Jacob. I have been investing in property since the early 2000s and founded Ripehouse in 2011. After buying my first two properties in my local government area, I moved to the big smoke and quickly lost my confidence. I turned my analysis paralysis into a tried and tested framework to work out why people live where they do and why they buy and rent property. This framework has evolved into what you see today. Ripehouse provides expert commentary, research reports and analysis tools. To hear a little more about my story, or if you have missed our introductory video, make sure to check out video 1 in this series. Remember what is possible with the Ripehouse investment system. 25% capital growth is our target in the first year. Let's have a quick recap of the key components that we must remember from the first 3 videos in this series. We want to be buying in the buying window of the nation's strongest growth markets. When finding these markets, it is not enough to just monitor the cause of growth signals. We need to know exactly when the cause is having effect and monitor that effect. We can reliably place ourselves in the buying window for our next purchase by looking at these market signals at a local government area. Our next step, once we have zoomed into an LGA of interest, the stars are aligning, we must then ensure that we select one or a number of target suburbs that are leading the charge forward for that local area. At any time, even though the local government area is generally experiencing strong buy signals, there may be suburbs that are firmly in the buy window and others that are dormant or proposing a negative proposition. To think of it another way, some suburbs are where all the action is, and others may not experience any impact from the positive effect. If we use the Moreton Bay example once again, as discussed at length in video 3 of this series, we want to break down how suburbs may enter and exit the buying window. The first suburbs we identified in the buying window in this local government area, Moreton Bay, back in 2015 and 16 were in the peninsula around the train line extension. Then south and close to the retail investment and university. Then things turned towards the north with lower socio-economic suburbs in and around the employment hub. Finally, for a short moment, even Deception Bay itself had a moment to shine, the highest public housing, lowest socio area in the LGA. Why do we see this type of progression time and time again? As stock tightens, interest and heat increase. Prices rise, yields drop. Investors and residents turn their attention towards neighbouring suburbs. They may compromise. This is an important point. It is just as important to pick the end of the buying window as it is the beginning. When there is new and additional demand in an area, assuming supply does not meet this demand, you would expect prices to increase, until of course that demand is priced in. This leads to a very important question. How do we know when our buying window is closing in a suburb? This is defined as a time when either there is too much heat in a market to effectively purchase. When there is dramatic heat in a market, it becomes difficult to assess value. You may come up against multiple offers for a property in a short time period. You might be caught in a bidding war. Because things are moving upwards quickly, there may be no comparable properties to justify what offers are on a property. So to purchase, you might have to make an offer above any other sales in an area. This is obviously a situation to be avoided. Here at Ripehouse, we like to challenge the status quo. Our expert commentary, research reports and analysis tools are designed to assist you to target outstanding growth on your next purchase. To achieve this outstanding growth, we need to help you be in the 1% To step up your investment game, to that end we use a number of unique signals when identifying which suburbs are leading the charge for your target area and if they still remain in the buying window. To run you through these measures, let's jump into the Ripehouse software for a quick demonstration. Okay, for this demonstration, once again, we will be starting on our Ripehouse account dashboard. For this example, doing suburb versus suburb analysis, we use our suburb search Explore the Nation page. You can use this link here in the analysis tools or use suburb up here in the sub navigation. Let's jump in. This is a research and compare target suburbs page. You can see we are showing 1 to 16 of 4,378 suburbs found. Now there's obviously a lot more suburbs than that in Australia, but on this page we're only showing those suburbs with reliable samples, so over 750 dwellings, and we need to be able to gather enough data on those suburbs to be able to form a reliable assessment. We need to know things with a little bit of surety. So obviously those other suburbs that are outside of this scope may not really have any properties at all, if any. Some maybe just postcodes, and they're not really worth our time when we're comparing the nation. So these are the suburbs that we have pinpointed as reliable for us to turn our gaze. Once again on this page we have a very unique display here of what is called a radar chart. A radar chart is a mechanism for displaying multiple variables visually to determine which ones have the most opportunity or positive aspects of each variable. I'll get into what those variables mean in a moment because they are the unique suburb level signals that we have here at Ripehouse that enable us to find suburbs that are firmly in that buying window and leading the charge forward for the LGA. If you prefer to have a table view, you are able to switch the view from radar to list. You can see the dark red colouring is the suburbs which are recommended by our algorithms. You are once again able to filter based on state, by local government area, by price, yield and property type. So you can really zoom in onto the suburbs that fit your strategy and buying requirements. And this page was last updated 10 hours ago. There's no point in not being able to access this information at a national level on a daily basis. We need to be timing our research and due diligence to know when exactly the buying window is emerging, opening and closing. Okay, let's just explain this list of suburbs here. They are ordered, obviously 1 to 16 in terms of the volume of the radar chart. Okay, that is to say, the higher the number associated with each of the 5 metrics. What this actually, we can dig a little bit deeper and we can tell a lot by the shape of this radar chart. Okay, so the differing shape means the suburb might be entering, within or exiting the buying window. To do that and to explain it a little bit further, when the opinion score is high, this is one of our unique soft signals within Ripehouse. We conduct regular interviews, we partner with national property media, and we monitor sentiment by experts in the industry. So buyers agents, researchers, valuers, real estate agents, industry commentators, etc. The more positive sentiment associated with a suburb, the higher the opinion score. It generally means that people are starting to turn their gaze. We might be entering into a bit of heat in the market. The higher the metric score, the higher our demand signals for imminent growth, the stronger they are and the more likely we are in our buying zone. Okay, our buying window is open when the metric score is higher. If it is building, it means we're moving into it. If it's decreasing, it means we're into our growth phase, which is potentially when we want to avoid, when there's a lot of market heat. This is a unique signal here. Remember, we are potentially the 1%. Ripehouse users are really on the tip of evolution in terms of property investment within Australia. The higher the investment score, the more Ripehouse users are looking at this suburb. Okay, so the higher the investor interest. It might mean that there is already heat in the market. It is an indication that people are turning their gaze towards this suburb and potentially we are now outside of our buying window. The investability score, it will potentially open itself up with a little bit more explanation in our next video in this series when we do street level analysis, but it does mean that there are many properties that are currently most in demand located in our Ripehouse sweet spot streets, those streets we want to seek out to invest in. Okay, so it means that we're able to buy there reliably and reasonably successfully. There's lots of stock to choose from. So we're looking for a higher investability score. Income is one. Once again, it's an internal measure. A higher income score does mean higher yield, but it also means lower vacancy rates and high rental volumes. It means a very accessible and healthy rental market. So there's no point having high yields when you can't access them, you can't rent a property, it's sitting vacant for a long period of time. So we need to see a combination of rental factors to see a high income score. So the shape does tell us a little bit about the type of suburb that we are focusing on. Here is one as an example where it is very strong on the metrics. Investors are looking at the suburb and turning their gaze, and once again over here as well, but we haven't really caught on yet in the national media and in the expert sentiment, so we might be getting in quite early into that buying period. You can see other suburbs potentially have a very different shape where opinion is reasonably high here, metrics is medium, it might be coming out of the buying window and into the growth phase, and lots of investors are interested in investing in this market. So once again, we might have already moved into or out of the buying window. All of these suburbs are big and green. That means that they are quite healthy in what they're doing. They are leading the nation forward, but we still need to be quite picky. Not all suburbs are this healthy and green, I suppose. The further you go down the list, and I will do a filter here for a local government area. Let's use, we'll pick a local government area at random. Well, why don't we use the city of Hobart? Okay, this is great for illustrating that not all suburbs are big and green. Okay, we have South Hobart that has no properties necessarily on the market in our key sweet spot streets. Okay, we have other suburbs that have very low scores in income and investability and staying to lower in the other three. And we have others that have a very low metric score, still people interested in buying and still reasonably high on the opinion score, but from our perspective it has really moved on. There's a lot to be said by the shape of these suburbs. Not all suburbs are obviously created equal, and as we have mentioned in any one LGA, as an aggregate the LGA might be in our buying window, but it might only be 2 or 3 suburbs that are qualifying as recommended here. We do display when the algorithm is recommending a suburb. So even though, once again, this LGA may assumably be in our buying window, there is only 2 suburbs that are currently amplifying our local government area signals into the suburb. I hope that clarifies things for you. You are able to click on the suburb to now do street level analysis using the next layer of our research tools. We are cooking with steam. We hope the end-to-end Ripehouse investment system is beginning to make sense and becoming clear to you. Here at Ripehouse, we provide expert commentary, research reports and analysis tools. Each has been designed to assist you to generate outstanding investment results, all with the Ripehouse system front of mind. We are by investors for investors. If you haven't already done so, why don't you take us for a free, no obligation trial? We just need your basic details to get started. Head over to our homepage, www.ripehouse.com.au for more details. Stay tuned for our next video. You are in for a treat, for in this video we step up our game to a level not otherwise achievable anywhere else in Australia. We show you how you can reliably find the absolutely optimum investment grade streets in any suburb in Australia, and how, if you get this right, you can drastically amplify your investment return. Until then, happy investing.